On paper, it might look like a no-brainer. Index investing might be boring, but with 10% returns on average, they make you rich over the long term. So you should probably just invest rather than paying off your mortgage. But real life isn't that simple. Stock market returns swing wildly from year to year. On the other hand, mortgage payments can be fixed, and the psychological impact of each choice is huge. In today's video, I'm going to compare both options using historical data, market research, and my personal experience after investing in property and index funds for the last 24 years. Section 1, the power of index investing. Let's start with my favourite way to invest. Low cost broad market index funds. They are renowned for really low costs, they are diversified, stress-free, and there are many more benefits. Since the late 1950s, the S&P 500 has delivered an average annual return of about 10%, which drops to around 6.5% after inflation. That is if you believe inflation is in and around 3%, but that's another topic for another video. If you zoom out over the long term, the stock market tends to grow. That growth is turbocharged by compound interest, where your returns earn their own returns. The earlier you start, the more time you give compounding to work. For example, if you invest £500 a month for 30 years at a 10% return, you end up with over £1 million. At 5%, you end up with just over 400,000. That's the magic of compounding. Small percentage differences make enormous impacts over the decades. Recent data backs this up. Over the last 5, 10 and 20 years, the S&P 500 has averaged 13, 11 and 8% respectively. But here's the thing, returns are never smooth. In most years, the actual returns fall well outside the average range. In other words, yes, index investing works brilliantly over time, but the journey can be bumpy. You have to be willing to stay invested through the downturns. So with this in mind, it's not for everyone. What about you? Can you handle the volatility of investing in the stock market? Section 2, the case for paying off your mortgage. Guaranteed return. Now let's compare index investing with paying down your mortgage early. Think of it this way. If your mortgage interest rate is 4.5%, paying it off is like earning a guaranteed 4.5% return with zero volatility. That's not an estimate, it's a mathematical certainty. Every extra pound you put towards your mortgage is a pound you'll never pay interest on again. This is what people mean when they call paying off debt a risk-free investment. Unlike the stock market, there's no chance of a bad year, and the benefits go beyond the numbers. It has a huge psychological impact. Reduce monthly expenses. Once the mortgage is gone, you free up cash flow instantly. Peace of mind. Being debt-free feels good, especially in uncertain economic times. Flexibility in retirement. Without a mortgage payment, you need less income to cover your living costs, which can mean retiring earlier. Before we carry on, this video doesn't contain any financial advice. The full disclaimer can be found below in the description. Section 3, weighing the trade-offs. So how do you decide? On one hand, investing has historically outperformed mortgage interest rates. Over decades, index investing usually wins financially, if you can stomach the volatility. On the other hand, paying off your mortgage is the safer play. It's a guaranteed return. It reduces your risk exposure and it can help you sleep at night. The real challenge here is time horizon. If you've got 20, 30 years ahead of you and you can ride out market ups and downs, investing probably wins. But if you're closer to retirement, a mortgage payoff can make more sense because it locks in a return exactly when you need it without worrying about a crash right before you retire. And remember, the risk with investing isn't just about losses. It's about the timing of those losses. Missing the stock market's best days because you bailed after a crash can devastate your returns. Section 4, my choice and why. So after almost a quarter of a century of investing and after researching for this particular video, where do I land? Well, I'm a huge believer in index investing. I built a large percentage of my wealth using it. But when it comes to a choice between investing extra money or paying off my mortgage early, I'd pay off my mortgage. Why? Because one, it's a guaranteed return. I know exactly what I'm earning by reducing interest payments. Two, peace of mind. I value the security of owning my home outright. especially in unpredictable markets. 3. Flexibility. Without a mortgage, my monthly expenses drop dramatically, giving me more freedom to take risks elsewhere, including my investments. 4. Emotional resilience. I never have to worry about being forced to sell investments at a bad time just to make a mortgage payment. In my view, mortgage freedom is one of the most underrated financial goals. It doesn't get the same hype as high return investing, but it changes your life in a way spreadsheets can't capture. Now I'm going to reveal the real reason why I would choose to pay off my mortgage early. Because the reasons I've just given are what me and my wife would choose to do. She doesn't like risk, and because of that, I would pay the mortgage off. As I said at the start, index investing is my favourite way to invest, but I'd have to make this sort of decision with my wife, and I know the boss would tell me to pay the mortgage off. Now we're getting towards the end of the video, but before we finish, I just want to tell you why I'm so passionate about this channel. It's because I was never taught about investing or personal finance at school, and I've had to learn the hard way over the last 24 years. I even wrote a book about my difficult relationship with money, which you can get for free, and I'll leave the link below. I've literally spent years making mistake after mistake and being far too anxious about money. And I know that's the same for the vast majority. But things have massively improved for me personally since 2019. And it's mainly because of a change in mindset and financial education. If you take the time to become financially literate, it leads to financial freedom, in my humble opinion. Yes, this video is all about a hypothetical scenario, but I wanted to also drive home the importance of investing ASAP so you can get some early financial freedom and start living life on your terms. Summary. You now know the benefits of investing in the stock market with index funds and paying off your mortgage early. You know my opinion on what I'd do in our hypothetical scenario, and hopefully you know how important it is to invest. And if you want to know how to retire early, step by step, see my latest playlist. You get 5-10 minute videos, and to get the most out of them, you should really watch them in order and take notes. I'll leave all 5 videos below in the description. Now I want to hear from you. Would you take the risk for a potentially higher return or go for the guaranteed win of paying off your mortgage early? Let me know in the comments. And don't just tell me which one, tell me why. I'm really interested to see your reasoning behind your decision.